afternoon, everyone. Good afternoon, and welcome to the Uncensored live Q&A session. My name is Danny, and I will give you the webinar today. Before we will begin, let's go through the structure of the webinar to know what we are going to see. Okay, so first we will have this is the agenda, the previous questions which our team has prepared. Okay, which are questions that are common among previous webinar and previous live Q&A webinar. They're gathered. This is how it looks like. Everything is gathered together. Then we have the dynamic questions, which is the true purpose of this webinar. So guys, this unique concept of live questions and answers that lets you see the answers on the screen is a very, very nice concept that allows you to just ask whatever you want regarding trading and to get the answers. Usually I put the question in here. Okay. All right. So this will be the second part. Then I will share with you some information to save you the trouble to find it by yourself on the website. And lastly, we can use these examples to explain about analysis types, but it's pretty common that we are covering it through the questions themselves. Okay. We already have here some. Okay. We're going to go through that. Now, any capital markets and trading information disclosed in this webinar is provided for informative purposes only and should not be constructed or applied as an investment advice, recommendation, or a suggestion. Now, the beauty about this webinar is that it's also recorded. And that means that you can just go on YouTube, on our channel on YouTube, and you can just review the parts that you wanted to see again. Okay, if there is any parts that are not that wasn't fully understood or anything you would like to see in your own pace, you can just go to YouTube on our channel and see it. Okay, is that same apply, by the way, for the rest of our webinars? We record the webinars, we put it on YouTube for you later on freely to review. Okay, so I wanna go to make sure that the webinar is recorded as I explained just a minute ago, and then we can hit the road. So I'll be right back. Thank you very much. Okay, it seems like everything is as we need, and we are going to first review the questions that we received. Okay, let's have a look. Let's see, somebody is raising their hands. Mr. Kunal, you are more than you are free to use the question section without you guys. You don't need to use the function to raise your hands because the question section is free to use. You can just use it, and then I will get to your questions accordingly. And I promise you that I see everything. Everything is open right here. You can, okay, don't be shy. Now, the first question that we have is, how can I get signals from AvaTrade? Okay, very good. Second is, how long does it take to get the funds when making a withdrawal? Okay. What is the difference between regular trading and copy trading? Okay, very nice. What is the NFP? Okay, and how can we use it in our analysis? Okay. All right. Very, very good. Okay. Let's take the question. What we're going to do is I'm going to open here a nice notepad for us to see the discussion so we can keep track in our sheets. Okay. Now, how can I get signals from AvaTrade? So the fastest way to enjoy the signals, okay, as you can see, there is like tiny 2 arrows pointing on themselves. It's not as easy to see. Maybe now you see that those are 2 arrows, you see? They're folded down. Okay. This whole interface is called a web trader, okay? Just to get to here, to see the signals, you have to be on that interface. Now to see this interface, you don't need to download anything. I don't know if you can see, but this is on the browser. So that's basically just by logging in with your email and password. Okay, to avatrade.com, and then you should see that. If it looks otherwise, there is a chance that it's not applied on your account. All you have to do is just to send an email to cs@avatrade.com, and then please apply the web trader, or you can access it by clicking on the button web trading. Okay, web trading. I don't have that because I'm already here, right? But if you don't see it this way, there is a button called web trading. I'm sorry, trading. Okay, and then you can just trading. Yeah. Okay. We this is how you can get to here. Now to use the signals, you can get there with via two ways. So like I said, primarily I'm just gonna fold it down, and then I have this nice lists of some assets. In this case, it's currencies. Okay, and that blue lightning icon here, that's gonna lead me to the signal. Okay, signal details. Then I have it explained it right here, and I have support and resistance. This is one way. Okay, this is a way that allows you to specify based on if you already know which asset you're going to trade, and then you can know if it has a signal or not. Okay, so for instance, I'm gonna put here gold as an example. Okay, right here I'm gonna click on gold, and let's see, gold has a signal. Okay, I can click it, then I have the information down here. Let's suppose I want to trade Tesla as an example. Yeah, Tesla doesn't have it. Okay, and also the market is closed, so it can't be. But if we take something else like an index, let's see Nasdaq as an example, you see it has it. Something the SPI doesn't have it. Yeah, anyway, you get the point. This is a way to first search for the asset and see if it has a signal or not. The other way around is to go to the signal section itself, and there it's going to show you things that has a signal. Okay, commonly what is here. Now we could stay this long, we can stay in this section long enough. Maybe this just hasn't been updated. Okay, but if you see that there is there's no stop loss and take profit, it means that this is no longer valid. Okay, we're going to speak about it in a second and see exactly what it means, if it's valid or not, and how can we use it. Okay, but now I'm just going through the differences for you to know how to utilize the to even approach before choosing a signal. Okay, so on this section, the biggest advantage is that you can see when the signal was baked. Okay, when it was produced, because the signals are produced on a certain price, right, with a certain scenario. That means that it could be a buy or it could be a sell scenario. Now, if I'm going to go with a USD ZAR, okay, USD versus South African rands, and I believe, let's say that it's going up. Let's say it's going up, okay? That means that I'm into the buy scenario, okay? It means that I'm looking for the value to increase. That means that I'm looking for the difference to increase, yeah? Okay, now if, just a second, I'm just making sure, okay, the reason that I'm unable to see the numbers that are presented here, which are my resistance levels, okay, I don't want to confuse anyone, so slowly I'm just going to have some drops of analysis, just some basic definitions. Okay, there are things called support and resistance. They are among the umbrella of technical analysis. The way to see that is basically to find certain edge points or pivot points on the chart. In this case, you can see that always the resistance will be in a higher place and the support will be in a lower place. As an example here, let me put an oval maybe around it. Maybe it might be easier to see. See that little guy here, and another one here. This is almost the same, so I'd rather not add another line to confuse anyone. Regarding resistance, obviously that guy. Okay. Now, why is that something that I need to acknowledge when I'm using the signal. Okay, oh, but that's, never mind. I showed you the support and resistance here on that time frame, but this validity is based on daily picture. It's based on daily picture, so we're going to shift to the daily picture. Okay, right now we are looking at minutes. Okay, we have 1 minute, 5 minutes, 15, 30, 1 hour, 2 hours, 4 hours, 1 day, which is what we need, weeks and months. Now we're going to shift into the days. Okay, that looks entirely different. We're just going to wipe it all out. Going to clear drawing. And we can then state the, let's see what it's 4990. Okay, it could be slightly higher, slightly lower, and that's fine. Also, if it's messing around with me, the price, the array, doesn't always present the number that I want. Okay, because it moves in certain increments, and sometimes it just doesn't let you land your hand on it. Now, how can I overcome this? Because I don't have time to keep on playing with that. I can just place it anywhere on the chart. Could be here, it could be here, it could be here. Okay, and then what I'm gonna do is just click it and change it from the inside, from the coordinates. And then the resistance that we wanted, which is, let's see, 18.4990. Okay, this is the one, yeah, that I took it from. So that's 18.4990, and we have the higher one. We have the higher one. You see, it doesn't let me place it. So okay, 5450. Yeah, and then we have it. Now I'm showing you here something that is not a mandatory step before you're using the signals, because this preparation might be complicated for some individuals. But this is a great tool to confirm the scenario before you're choosing it, and then you'll know what you're up against. Okay, it's not mandatory, but this is something that you can do, okay, for your own success. 22, okay, that's close enough. Just going to change the end of it. Yeah, and we have it. Now, of course, I didn't have to do it because it's presented here, but this is for me to see a bit more carefully how it looks like from the inside. And then I can choose a scenario that I, just a second, guys, prefer the most. Now, if I believe that this was a buy, and again, this appearing to be looking a lot different now from that angle, yeah, because we are just engaging. What are we engaging here? Who knows? This is, yeah, what's that point? Okay, this is another. Who knows what's that I have put a rectangle around? What are we seeing here, guys? We are now the highest that we've been today. Let me change it to the crosshair. Okay, like I said, guys, there is no need to be overwhelmed. I'm just dropping bits of analysis just one by one to construct a whole nice picture at the end of it. Support and resistance that we've placed thanks to the signal are very, very easy to find in various time frames. As you saw, we shifted from minutes to days. Okay, and now as we can see, we just about to encounter another resistance, which is roughly here. And this is why I have tendency to believe it might turn around. Okay, it might turn around before. So that looks different from the minutes. Now it's okay. You see, it's a bit different. It's a bit different than what we saw. Okay. Okay, very good. All right, so the signal, how exactly are we using it? Okay, so we've done all of that. We saw all of this. In the beginning, we went down to support and resistance. We've done the preparation. We changed the validity. Now, how do we use the signal? Okay, so the signal is placing automatically two pending orders, which are take profit and stop loss. Okay, take profit and stop loss. What does that mean exactly? Take profit closes the position with the profit, and stop loss closes the position with a loss. Now, why would I want to close the position with a loss? Well, I understand that the take profit part, but why would I want to use something to close my position with a loss, right? I could think, okay, I can just wait. If the market goes up and down, I can just wait until it gets to the price, right? What do you think, guys? Is that an advisable thing to do? Can I just take a random direction and wait, or uh, or it's not a good idea? We have a question from Ade. What is the rectangle for? Okay, this is an excellent question. This is an excellent question. Thank you, Ade. Can you see that from the price that we had today, the highest that we have today, we are not passing the previous resistance, right? This is the resistance from, let's see, from when? From the 14th of May. That's roughly 10 days ago, yeah? And we see that we haven't got there yet. So there is a chance that what will happen similarly, I think you can see what happened here. Okay, can you see what happened here? I want to show you. Let me see if I can dive in to show you. This candle here is a reversed hammer. Okay, the tip here at the bottom and the handle is at the top. Let me show you just a second. Might be easier with 4 hours. Okay, we're not gonna see that this way. Okay, we need the specific time that I have placed. You see what happened here? Okay, so in the beginning it went down. Okay, it started going up, but eventually it was, what happened here? What's that? What's that around here? This is when it was rejected, right? 18.470. It started declining, yeah, and then it reached. Okay, so what I could think that unless something fundamental will take place and justify that it will break the resistance, I have a reason to believe that guys, is that understood? I hope that this part is understood. This is really on a nutshell for analysis. I usually don't expand more than that in the webinars, not to confuse anyone. Okay, but this is something maybe you should do before using the signal to see which scenario you like the most. Okay, but as I said, once I have a scenario, let's say that I don't want to do all of that. Okay, let's suppose I just click view signal, I expand it nicely, then I go with buy because I think it's going to go up. Okay, let's suppose. Don't worry, we're going to look at the sales scenario as well, but this is just as an example. Now, when I take a buy with USDZAR, okay, and that means that the USD, I believe that the USD is going to strengthen more than the ZAR. In other words, the difference will increase, the difference of how many South Africa, this is how many South African rands I need to compare one USD dollar. Okay, now if I take a buy as it is, okay, as it is with half a lot, I can make a 284.85. If it's going against me to where is it? The just a second, let me change it quickly. Okay, you can modify the levels all the time, guys. You can keep playing with the lines, move it on the chart until you get a clear picture on what you want to do. Now, I'm just using numbers that the signal already provided me. I didn't do anything here. Okay, I'm just showing you. So if it gets to the green line, if it does pass the resistance, I'm going to make 278.80. That's going to keep on bouncing. Okay, and the stop loss here, if God forbid it gets to here, I can potentially lose 250. Now as well, I can customize that according to my risk money management. If I decrease that 10 times less, that becomes 10 times less on my potential impact, and then I can adjust it as I wish. Okay, so what do we learn from the signals? Okay, let's just go back and recap that very swiftly. Okay, we've learned that I can access the signals from here. Then I can see the scenario and see if I like it or not. The other way is to go to the signal section itself, and then we can get the time that it was produced, right? And based on that, we can pick. Okay, and then our analysis is never mind. That's completely fine. Okay, let's suppose I don't want to go through support and resistance. Okay, if I'm too lazy, I'm just gonna click on buy or sell. That looks fine to me. Well, the validity I'd rather change. Okay, so now we see, okay, it might go up. Let's suppose that it can go down as well. Let's see what's happening with the sell scenario. Okay, if I take a sell, obviously it should be the other way around. My green should be down and my red should be up. Yeah, when I'm taking a sell, the intention is that the value will keep decreasing, and if it goes above, I'll have a loss. Okay. All right. Very simple. Do we? I think this is an explanation that is suffice to use the signals. Okay, as I have explained, those are pending orders. They are placed automatically. Doesn't matter what I'm going to choose from the signals, even if it's something else. Let's say crude oil doesn't have it. You see? Now, what I wanted to show you, if I'm looking at crude oil and I want to use the signal that I have here, I want you to see what happens when okay, let's click it. What does it say here? The market has already reached a key level. Yeah, so the analysis that it was based upon already, the scenarios, one of the scenarios already took place. Okay, the analysis already happened. This is why it's no longer valid. Now, what will happen if I still click buy or sell? It's just not going to place me the take profit and the stop loss. Okay, it's futile now. I have to wait. Well, I don't have to wait, but if I want to use signal on crude oil, I need to wait until it will be produced again. Okay, but let's say corn is an example. If I'm using corn, yeah, so that will work similarly. Buy. See, I already have it. Yeah, I have to make sure that it's like I want. All right, do we have any questions about that, guys? Any questions? How often you recommend? How often? Okay, so there is a question from Frida. How often you recommend to use the signals? To be honest, as frequent as you want, as often as you want. You can just use it freely. This is a free content. As long as you're using it, then it's helpful. So I'm not sure that I understood what you asked, but really, if it works for you, so yeah. The signal for crude oil was for a sell, but it would be result in a loss. That depends on the scenario, Are. That depends on the scenario. Okay, that depends. But apart from that, I'm just gonna write down here. Okay, how can I get the signals from AvaTrade to access signals, you can log in to avatrade.com, click on signals section, or click on the blue lightning icon to buy the instrument. Okay, let's maybe put that a bit lower than that. Maybe keep it this way. We can barely see. Okay, well, I guess it's fine. All right, how long does it take to get the funds when making a withdrawal? Okay, that depends if it's through a card or through the bank, but typically up to a couple of days, up to 10 days. That depends. Depending on the method, between 1 to I know that this range is a bit wide, right? You would expect me to put numbers that are something depending. Yeah. I guess that I'm expected to put good numbers that are close to each other, but it depends. Okay, depending on the method between okay, that could be either a card or a wire transfer or an online method, so that depends. Okay, what is the difference between regular trading? Okay, so that takes time. I'm going to show it to you in a minute. What is the NFP and how can we use it? Okay, then I guess let's make a quick comparison here with regular trading, manual trading, right? The intention is here, manual trading. Okay, because this is the other. Okay, doing manual trading and copy trading. Let's see what the differences are. So copy trading, and let's how are we going to do that? Okay, so what we're gonna do is we are going to put copy trading in manual trading, and we are just going to compare it as in the downs and the ups. Okay, so copy trading, is it time consuming? Not really, right? Okay, so copy trading saves time. Okay, maybe also if you're following somebody who is good. Okay, if it's good. So this is what we're gonna do. Let's just separate that. Might be easier to do it here, right? Oh, sorry. Let me get the other question. Okay, so we have copy trading. Copy trading. To make it easier, we're gonna put here ups and downs, right? What are the ups? The ups are that it saves you time, right? It's a time saver. Let's put it this way. Okay, you can make the profits from the person that not from, but thanks to the profit, the person that you're following. So we have time saver, and doesn't require. We're gonna speak about that. I don't wanna put down. It doesn't require knowledge because it happens automatically, but still you want to be able to monitor what's happening. So it doesn't require experience. Okay, let's put it this way for now. Maybe that's all I can think about. You guys can think about any advantages of doing copy trading. It doesn't require experience, and of course, the time is not an issue because you don't have to do that because it happens automatically. The downs are let's say that when I'm following somebody, I have no control on how the strategy is going to happen. I'm depending on someone, right? So when the down would be the results are depending on the person I'm following. Unless I'm using an EA, we're not going to open that now. What we're offering is we have AvaSocial in our app. We have a third-party company called DupliTrade that we can work with, and you can do copy trading or social trading by linking your account to somebody else's account. This is the definition that right now I'm explaining about, and EA is something else, and that's what I can think about. The time saver. Okay, when I'm copying somebody, I don't have to know what he's doing. It doesn't require any experience. I can just follow someone or copy someone that I want, and I don't have to waste a minute because it happens automatically. From the other end, the results are depending on the person that I'm following. That means if it's good, I'm making profits. If it's not good, the other way around. Okay, manual trading, it's exactly the other way around, right? Ups are the results are only depending on me. Right? The downs that, okay, we have percentages loss and profits because the person you're copying gets a percentage. Right, there is the downs is also maybe also paying a commission, right? This might be also something to think about. Usually it's a tiny markup, and if you make profits, it could be worth it. But this is also, I agree with you, Adi, it's something we should consider. Now, with manual trading, the results are only depending on me. Okay, that means risk money management, analysis, okay, margin usage, exposure, and so on and so on. Now, the down would be that it obviously it takes time. It takes time, and you need a bit of experience, right? Requires time and requires experience. Now, taking this into consideration, what I can do, what I would naturally want to do, is to first learn how to trade and have the necessary tools to make the right judgment. And when I'm in a point that I can trade for myself and I would like to have something in parallel or maybe test my progress or improve my progress or check something else as an addition, that I can put something in parallel with copy trading and then see how I can improve if I've reached that level. That's something I would recommend. But if you're doing good research, copy trading can be very, very beneficial. Okay, that depends on the research and the person that you're following. AvaSocial make it so much comfortable. Okay, I highly recommend you to try it AvaSocial, or maybe DupliTrade is also a nice solution to try. Okay, let's take that. Of course, what I wrote here is everything that comes down from that as well, right? When I'm trading manual, I make my own plan, I make my own strategy, I make my own risk money management. I'm responsible on my results. And I can determine how much money I'm using, how much I can lose, how much I can make. All of that I can put in my plan, and I have 100% control on my composition. Of course, the market still is going to move the way that it's going to move, and I can always lose and gain. But when I'm trading manually, it's entirely up to me, okay, in terms of strategy and a plan. Now, what is okay, so we wrote the differences. We're going to take all of that. We're going to put it in here. Again, we did it in a form of a discussion and not in a very professional way, because still we are on a webinar. So I'm sure that if you guys will really dig into that, then you can find more things. Okay, but I just wanted to show you the major just a second, the major difference is something here. Okay, something is happening here, right? Where is our, oh, okay, maybe that's what I wrote that before. I apologize. Was this at the bottom? I didn't even know that it was there. How will I put that? Yeah. The complicated part is how you blend it into the presentations for you guys to see it later on. You know, let's see. What is the NFP? Okay, so the NFP here. Let's take the question. The question is, what is the NFP, and how can we use it in our analysis? Okay, so we spoke about the signals in the beginning. That was technical analysis. Technical analysis, we learned from that it's support and resistance, and we have certain tools that we can use from the nice lists here to place on the chart to help us remember certain areas like that and like this. So those are, we saw before, right? Points on edge points below the price are support, right? We said support is the lower point, but the higher points are resistance. Yeah, resistance. Okay, and they are cool. We can find them in every different time frame. Yeah, even if I'll change to weeks. Okay, it looks, obviously it's gonna look a bit different, but let me show you. Perhaps, see, you can find in every time frame. Okay, it's very it's not difficult at all. Okay, you can always improve it. Now, what is the NFP and how can we use it in our analysis? So we spoke about that, the averages and everything. So this is technical analysis. And we have a fundamental analysis, which is what the NFP is among. Why? Because the NFP stands for non-farming payroll. Okay, the non-farming payroll, what does that mean exactly? That means that this is all the new jobs applied on US beside agriculture jobs, okay? Farmers and agriculture jobs. So this is the non-farming payroll. How we can get more information about that and how can we use it in our analysis? We're going to discover that in a second. So what I'm going to do, let's fold that down for the time being. And on the left-hand side, I'm going to go all the way down to the discovery, this globe icon here. And then I'm going to go down to economic calendar. Okay, and then I'm simply going to click here on the magnify. I'm going to write down non-farm. Okay, and then it's going to bring me the previous results, and it's presented very nicely. As you can see, the previous, so that's what happened last time. That's what we anticipate that will happen, and this is what actually took place. we're gonna have that after the occurrence only. As you can see, this is the upcoming. This is next week. It's not next week, just a second. Sorry, this is 2 weeks. In 2 weeks, you see, this is the 7th of June, and this is the first Friday of the month. Okay, first Friday of June, and it's showing us the difference. You see, this is what happened last time. Yeah, the 175. And the forecast here is it will even decrease more. Okay, it will decrease even more than that. And then how can we use it in our analysis? Let's suppose, let's do something. I think we had this here to the fundamental analysis. Yeah, definitely we can use that. Let's just adjust for us to work a bit more specific. We're just going to take the numbers from here. So that's 175, the previous 175,000. That's obviously in thousand. That's what the K stands for kilo for 1,000. And that's okay. And the actual, that's the actual. Sorry. On the actual, we're going to use it as an example. This is, oh, and that's okay. So we have the forecast. Let's keep it here. What I wanted to put down is the previous, right? We are missing here the previous. That is the previous. That is the previous. Forecast is, right? Let's see. 175 and 150. Sorry, 151. Yeah. Now, hypothetically, let's take that. Hypothetically, let's look at some scenarios. Let's say the actual, we're gonna have some options. We're gonna have option A. It will be, let's say, just a second, 165. Okay, B will be an obvious result. Obvious for the sake of the example, of course. And okay. Why? Let's again. Let's see what was revised from the previous. Just a second. No, it makes sense. It's fine. So let's focus here on the scenario. Let's see if it comes as 165, which is higher than the forecast but lower than before. Okay, let's also acknowledge something very important. This is a US report. This is a US report, therefore, impact on the dollar. Okay, USD. Up or down. All right. This is again, as we said in the disclosure, it doesn't mean that necessarily things are going to end up as we plan, because the market fluctuates in two directions. It doesn't go up or down. It goes up and then down, or down and then up. Okay, so that means that for the short run, it could look like that, and then the long run will be different, or the other way around. Okay, but we are just looking at the logic here. Now, logically, if we last time it was 175, we expect it to be 151, and it's, let's even put it down, higher than higher than forecast, lower than before. Okay, so what's gonna happen with that? Up or down, guys? What do you think? Again, what kind of contribution does this report is even providing us? How the analysis has any benefit from how many jobs were applied? How does that affect the economy? If I have more people that work, so what do I get more out of that? Taxes. Okay. All right, David, we get more tax. Okay, that's interesting. Might be right. But what do we get? We get that more people are driving the economy, right? Working, producing, paying tax, getting paid, and driving the economy. So more people employed, part of the wheel. That means that it's better for the economy. So the more people are, more jobs applied, the better the economy will be driven. That means that if the report is this way, we can't be too sure about if it's going to go up or down. However, because it's lower than the previous, we have a reason to believe that it can go down as a result from that. But because it's higher than the forecast, it's up to interpretation. It's open for to interpretation. Now, 200 higher than forecast, higher than before. Is that up or down? What do you think? More jobs supplied, more people driving the economy. We can anticipate a positive result, okay, out of that for the dollar. Again, if I'm trading dollar against the euro and the euro didn't have anything significant in its fundamentals, I could expect dollar perhaps to increase its value versus the euro. Okay, just as an example, when trading currency pairs. 145 lower than forecast, lower than before. Yeah, so that, what do you think? Is that going to go up or down? Come on, guys, help me out here because I'm doing this for you to understand. We had the option A. This is open for interpretation because we can't be too sure. This is a positive result. This is higher than before and higher than the forecast. So we understand it could lead to a positive. What about if it's lower than before and lower than the forecast? Okay, much less jobs applied than we expected. Negative. Okay, great. Thank you, Milan. So we can think that if it gets down even further down, lower than the forecast and lower than before, that it might lead to a negative movement. Okay, please take all of that in consideration, that this is analysis and things can be otherwise. Okay, but that's the logic way to see it. Yeah, now I'm gonna show you, let me put that down. Question is if I can place all of that in here. Never mind, we saw it in here. I think that's enough. So I'm gonna put here explained on the chart. Excellent. And now let's send you the links here. There are some links here that I'm gonna send you over the chat, which I really hope that you're getting, because I have no proof that you guys are receiving what I'm sending unless you guys are telling me that you received it. Okay, so those links are to save you the trouble. That one is an example. The FAQ and the help center is if you have more questions regarding the facility, you want to get more familiar with some of the FAQ questions. So you can click on that link and then you can get there. In here, this is to make a real account if you had enough with the demo. And this is for additional education. I'll be frank with you, to get to here, you can also do it from this interface. Let me just get rid of what we have here. And to get out of the economic calendar, you can just click on this. Okay, and then you get back to the original, to the default screen. And okay, now to the academy, to the tutorials, as you can see, we have here this, it looks like a YouTube video icon, okay? And if you click on tutorials, it's gonna launch here, it's gonna open the window, and you can scroll down. We have many things that we can learn about: the overnight fee, the okay, the stock market a little bit, what is PIP, all kind of things, really, all kind of things that you can enjoy, content that is free for you to use. And in here we have the academy. Well, we don't need to go there now, but because I've already sent you the link, but both of those things can be accessed from here as well. Okay, just to save you the trouble. Let's see if I sent you everything. Yes. This is the education section. It also has interesting content, interesting tutorials, but it's more written than on a video. Okay, for you to study. The education section, it's also amazing. I highly recommend you to try that as well. All right, so we had technical analysis, a little bit on a nutshell with the signals. We had fundamental analysis. We looked into the non-farming payroll. Oh, right, let me put it here. NFP stands for non-farming payroll, and it's a report shows how many new jobs were created. Side agriculture jobs. All right, to US, sorry. Percent created in US in the past month. Okay, you don't have to remember that, guys. It's written on our calendar anyway, but that's just if somebody sees the webinar and it didn't get to that part, so it's written here. So a report that shows how many new jobs were created in US last month beside agriculture jobs. Okay, perfect. So guys, I think unfortunately we have another 2 minutes before we say goodbye. So this is the right time for me to send you the Q&A benefit, which basically allows you to receive a premium market review from your senior account manager for free. Okay, so I'm gonna take it and I'm gonna paste it at our chat. Okay, you have the Q&A benefit. Just give it to your senior account manager and get your one-on-one premium market review. We have another minute and a half, roughly. Anybody wants to take advantage and ask one last question before we say goodbye? Anything that wasn't understood, even from the things we had in the beginning? It's a nice pause view. Yeah, absolutely. All right, so thank you all. Thank you, Albert. I appreciate the feedback. And I'm happy that you could learn at least one good thing from the webinar. I wish you all, thank you all for joining us today. Thank you all for the lovely questions you helped me through the audience. I wish you all a fruitful week and have a good day.